Hi, this is Jack from Alpha Charts with a state of the market video. Today is June 5th, 2021. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so starting with the SPX, um, it was a pretty good week. Back closing right at all-time highs. Um, you got the moving average starting to come, swing back up and separate. That looks very healthy. Let's go to the Qs. All right, so on the Qs, I think this channel is still, um, being was respected and looks that it's holding up very nicely. One of the things that I wanted to mention here, let's go to a monthly chart. So here's a monthly chart of the Qs. And what I did was I put Fibonacci's from um, top to bottom here. And here's the extension, right? So the 1.618 extension of this move, which is 2000 to 2002, right? High to low, is is right around 368, right? I think I got the numbers exactly right. So 368. So let's drill it back down to a daily chart and let's take a look at this. So where can potential trouble pop its head in? We say trouble, maybe give the market some pause, maybe another pullback, who knows, right? So, what we got here, roughly 9.5% higher from this point, we'll run into that Fibonacci extension. So I'm not saying that this is where the top is going to be in the market or anything like that. I'm just saying this would be a logical place to take notice of and just to be aware that when we come up to this area, no one knows what's going to happen in this area, but 368, that's an area that I may be a little bit more cautious with to see how price reacts when it gets to that area. So that's the Qs. IWM, still in the range, right? Still in just a range. We could easily just chopping around in here, right? Actually, fairly narrow range from this big up move. So not doing anything wrong, just chopping around. So that looks fine. Let's move on to IWO because that's a good representative of what we're doing here. And maybe now we can do something like this. So for growth to really for me to feel good about growth, one of the things I'd like to see is IWO break out of this downtrend right here, and it looks like it's going to be trying to. These moving averages are literally on top of each other, and so one more little push up, and it looks like the uptrend could begin again, and it's going to start making hopefully the right side of a base, and then decent volume coming in. Yeah, so I think that looks pretty good. It's IWO. All right, let's go on some sectors now. XLF continues to be a monster from the breakout, right? Has been fantastic. SMH, which was last week, the last couple of weeks, back in here, we know what was going on, but now it looks very, very strong. Coming up to that area, though, right? 257, 255, somewhere around there. That's the area that gave it problems in the past. So let's see how it deals with that area. It could very easily, break through it this time. 1, 2, 3. This would be the fourth test. It could also roll over again. So, not out of the woods as far as SMH goes, but again, nice strength the last couple weeks. Looking at lumber. So in this area, everyone was talking about lumber. It's kind of funny how we watch lumber every week as an indicator, and it put on everyone's radar, like up here near the top. Like everyone's talking about lumber. Lumber is the new Bitcoin, right? Well, it put in this topping candle right there, and it's gone down ever since. Now, again, we're looking at lumber as an indicator. So what does that say? That says that maybe 3 to 6 months out, there may be some issues going on. So if we have a divergence of lumber to the market, I think that's where there may be some information. Good chance it comes back down here to this 83, 82, 83, $84 area. And then we'll see what happens at that point. But that would be, that's saying that, 3 to 6 months out. So, there could be problems. It doesn't have to be 3 to 6. It could be, sooner or later. It's just, an indicator. You have to kind of gauge it. But the divergence that we're starting to see now is something that I'm taking notice of. And by itself, not actionable because we don't know the exact timing of it. All right. Let's look at bonds. So bond ratio. Let's go here and let's get rid of fine. Okay. So, we're just going sideways. So we're not seeing the spikes that we're looking for, right? We're not seeing these big spikes up. We're not seeing, lower lows yet either. So it's just going sideways and doing that for a while with maybe a slight drift higher, right? Nothing that I'm concerned about at all. So I mean, they look fine. There's nothing warning in there. Let's look at the 10-year though. So 10-year, what I was worried about was a dramatic spike or increase. And again, just like the bond ratio, we're just seeing a sideways move. We're not seeing anything, maybe a lower high, but we haven't hit a lower low yet. So this still could be a bull flag or something like that in the 10-year. That's very, very possible. So nothing actual, nothing I need to worry about at this point. The VIX is low, right? I mean, we are getting very, very low, which is good. That says it's a trending market, and I think that's positive for at least another 10% up in the market. So might as well participate in that, right? The VIX again moving lower. It all looks good. So that looks nothing to worry about there. Put call ratio, equity only put call ratio. All right, we had an issue right there. Market kind of came in just a tiny bit for a day, and people got a smidge, more bearish. Nothing overly done yet. So, we call this a bullish range. These little spike ups, I don't worry about that at all. I'm really only worried about it if we're in this section, and at that point, that's probably more of a buy signal than anything else. So put call ratio looks healthy. I got fear and greed up here. Might as well do a quick little fear and greed index look. 38. So I'm sorry, 48. So it's neutral. Again, there's no extremes going on in the fear and greed index. So again, not much of a signal if there's no extremes, right? Value line geometric index. So I was worried about this divergence. And if I just adjust my line just a little bit, which would still make it a legit line, we're still showing the divergence, right? I mean, it hasn't resolved yet. But market's done nothing wrong, but the divergence is still there. So again, nothing that you're going to act on unless the market starts to show some weakness, right? Percent of stocks over the 50-day moving average. We broke this trend of lower highs and lower lows very nicely right there. So breadth is improving. So things look, pretty good with that. So that's let's go back to the cues. To me, everything is looking really good. I think that we can easily move up another 9-10% in the cues and not blink an eye. I think that maybe with this Fibonacci extension, with lumber starting to roll over, with the divergence in the value line geometric index. It'll be very interesting to see what happens when we get up to this 367 area, 368 area. Not calling a top in any way, shape, or form, but this is the area that would make me a little bit more a little more cautious. And we don't, it's not going to be right here at this moment, June 11th. It could be, but it's not going to be. I'm more worried about the Fibonacci than I am the trend lines that I drew in. Just look at the equal weight real fast while we're here. Equal weight actually looks better. Shows you that the breadth is breadth is fine and doing well. And actually, if you look at things like Amazon, I'll wrap this up in a second. Amazon looks pretty bad. Apple looks pretty bad. Tesla looks pretty bad. Alibaba, looks pretty bad. Maybe trying to do something here, but it still looks pretty bad. Google looks better, right? Google looks absolutely fine, looks good. Facebook looks fine. So those two look fine, but the other index, the other huge mega cap stocks names look terrible. So there's that too. All right. And again, I hope you guys have a good week. Stay safe out there. This market looks very strong. Also, my Finviz scan that I usually that I use, has been returning 25 plus names a night. That's another indication that the market is very healthy right now. So I think it's bull market. Let's take that 10%. If you are in growth names like I am, that 10% could be much higher because those things move much faster to the upside and to the downside. So that 10% could be very significant. All right. So I hope you all have a great day. Good week trading. Take care out there. Check out my stocks to watch video that comes out tomorrow and next weekend. Let me not forget this. Trader Lion is putting on their first annual summit and conference, and it is next weekend. It's a 2-day event. A lot of amazing people out there. That are in there. I happen to be presenting on one of the hours there again, and there's even more that were announced. Just amazing group put together here by the Trader Lion. So this is the website, Trader Lion Annual Trading Conference. I'll also link to it below. Just click the link, set it up. It's completely free. And again, some of my absolute favorites are on this. So I cannot wait to watch this and take part in it. All right. Again, hope you guys have a great week. Take care.